Hi guys, how's it going tonight? Up a little bit late, preparing for next week, and also reviewing some past trades as well. It's really important for us to review past trades because it gives us an idea of what we did right so we can focus on our key strengths. Alright, so we're going to talk about tweezer pair combinations and the significance of it. So there's two teams. One's the Bears, one's the Bulls. One's always attacking, one's always defending, sometimes both are attacking at the same time. But there's always a constant tension between the Bulls and the Bears, and we think of it like a tug of war. There's always pulling, and there's always tension, there's always a fight between supply and demand, and it goes something like this, okay? So on this x-axis right there, just so you can see it, referring to these two candles. So this is what the significance of these two candles mean, okay? So the price opens up right here, and then the Bulls, they push it up to the top end of that wick. Okay, so it's getting right there to the top of the wick, and then the Bulls push it. The Bears push it all the way down to over here. Right, see that wick? Excuse me. See that wick right there where it ends? And then the Bulls defend the territory, and then they push the price back up there. So wherever the Bulls and the Bears have been fighting each other, where one team attacked and the other one defended, there's usually a wick on the ends of it, and that's how you kind of take a look at it, right? So now, once again, you open the price up there, and the Bulls pushed it up there, and then the Bears pushed it all the way back down to where it opened, and then they pushed it back down even more all the way down there, and then right here, okay, is where we ended up closing the price. So these candles, the red body that you're seeing, the red upside down rectangle for the newer traders here that you're seeing, the body refers to where the body refers to, basically, you can say the team that won and who had the most ground. So in this case, the Bears ended up winning it because the price opened up here, and then they pushed it all the way back down there, then they came back here. So within this ground right there, the top of that red bar to this one here, is where the Bears had the majority of the wins, you can say. Okay, that's kind of how I see it, to make it easy. And then after that, and this is what we call it in the daily candle, okay? And then what happens is, so now the Bears completely won, and then they opened it right there for the next candle. So by this candle, you would think that the Bears have the momentum, right? And that they actually do. And because they have the momentum, right, they're going to keep driving it down. But unfortunately, they couldn't break it down lower than pretty much where the price was before. So here the low was 7.5 cents, and here is 7.549 cents. So it's pretty much right on par with each other, within like 1%. So we ended up getting to right down over here, and we never really got below it. Okay, so this one was 7.5. Oh, sorry, this one was 7.545, and this one was 7.549. So just put this one here, that's 7.549. Okay, so now the Bears pushed it down to over here to exactly where the last candle was. These bars refer to a daily candle, which is, it's a representation of one single day and what happened. So it's kind of like 101 candlestick analysis for everybody. So if you had two 12-hour candles, right? So once again, you got two 12-hour candles. If you combine them, that makes one daily candle. Just like this one, if it's two daily candles and you combine them, you're going to have one 2-day candle, right? So of course in a week, if it was a weekly candle, like I'm showing you right here, okay? I'm showing the weekly candle right here. This one's significance is that it's worth 7 days of 7 one-day candles, right? In a week. That makes sense. It's simple math. So now what we see is once again the Bears push it down to over here, and then the Bulls end up pushing it back up to where it opened, okay? And not only that, the Bulls ended up pushing it all the way up to right over here. See the top of that wick, that range? So they pushed it up to about 8.376 cents, right? So pushed it to the top here, but here is where they ended up defending it, right? They ended up defending it So if the bulls are attacking and then the bears are defending, it shows by a wick. And then it gets to down over here, right? So this is why you got this big green body. So if you look at it here, this is a really beautiful candle because, well, not only did the bulls end up defending, right, but they also made the most ground. So keep in mind, this is the team that made the most ground, okay? Got to keep that in mind. And then the significance of these two candles is huge. So what it means is that on one candle, the other side, the bears, were being really offensive, right? Really offensive, really offensive. But the next round, this candle right here ended up devouring it, okay? And they ended up winning it overall. Not only did they win and defend, but they made a lot of ground. And before this team was attacking, and then like the bears were attacking, just think of it as two sports teams. The bears were attacking, right? And the bulls were on the defense the majority of the times. But then this candle completely took over, and then the bulls ended up having the majority of the ground, and they won a lot of fights in this particular round, made a lot of plays, and then now, right, they made way more ground. They pushed it above where this one originally opened, and they made tons of ground by pushing it up even higher. So the significance of that is that one team was defending, and then the other team was, one team was attacking heavily, and the other team was defending. But then all of a sudden, in the next round, the team that was defending is suddenly on the massive offense, and they completely took over. So they took over in one way, okay? This is what you call a bullishly engulfing candle. And the bullishly engulfing candle is exactly what it sounds like. Bullishness or something bullish simply means that it has a lot of momentum to go to the upside. It's showing a lot of strength. It's showing a lot of consistency. It just looks like the market has reversed, right? When something is not reversed, but when you just say something bullish, it just means that it's going up, right? Bearish means it's going down, or what it looks like, or what it's perceived like at least, okay? So then the significance of this one is that this big green candle completely engulfed, meaning like it's completely like it's overtaking it. Exactly what the English word means for engulfing it, right? So if you could take a hamburger and you fit it all in your mouth, you're engulfing a hamburger. So this candle right here is engulfing the red candle right there. And that's huge because it shows that not only were they just on the offense, but they completely is now just shattering the bears, and the bears are on massive defense. So these two combination pairs is called a tweezer pair combination, just because of exactly how it looks like. It looks like tweezers, right? Think of this as where you're holding the tweezer, okay, or whatever, chopsticks. But these two here are equivalent. There's the same low down over here, and the bodies are usually the same as well. Usually it should look something like that, okay? I'm just going to show you guys quickly. Like if it's something red, right, and then this one here is green. I should just made that one green first. I don't know why I did that. It's kind of late. That was not really efficient, now was it? And then you got the wick, right? You got the wick that goes on each side. 1, 2. Usually it's very symmetrical. Looks just like that, okay? See what I mean? It gets to the exact same high over here, and it gets to the same low over here. But because it's not like that for here, this one ended up getting actually way higher, right? Because it bullishly engulfed the other candle. And that is one of the most significant things. This candle alone is fairly bullish. If it was green, right, this one here is called a bullishly spinning top, right? But it's still bearish. Let me show you guys what I'm talking about. It's called a spinning top candle because like they could be fairly big, right? These are different variations of these. But it's basically, a lot of the times, they're basically just candles that have basically like a fatter body, you can say. A fatter body. There's not really any good examples on here. But yeah, it's called a spinning top. Kind of like this one. This is a good one right there. Where the wick that goes up and the wick that goes down is about the same length. And it's got a pretty decent sized body. Okay? Do you see what I mean? The body and the wicks on the bottom and the top, they're both equal sizes roughly. You can see it red or green, either at the top or the bottom, right? So if you see when you're like at the bottom and you think that it's going to be reversed, then this one right here, if this one showed up red, right? It means that like if you're going down rather, okay? If you're going down, then the market is dropping right here, and you see a candle just like this, right here, you wouldn't think much of it right now because it's still pretty bearish, right? Nevertheless, it's still a spinning top, which is a bullish candle. Now, if it was green, it would be different. At the end of a big uptrend, if it was green, you would say to yourself, like for example, this one right here, right? It gave you a bullishly spinning top and it was green, and we did uptrend a little bit, so it was a good scalp. So if it was a green one there, you would most likely think the same thing. But then if you get a combination of them, right, that's even better. So this one here is a combination of many different types of candles. It's a combination of a bullishly spinning top by itself, okay, and it's also an engulfing candle. So this is a bullishly spinning top, but more bearish because it's red. This is also a bullishly spinning top, but a very bullish one because it's green. And so that's two good reasons already to consider it bullish. And then after that, okay, you see that it's an engulfing candle as well. And I mentioned in my tweet right here, okay guys, I mentioned in my tweet, no joke, that I said this, like September 24th at 12 p.m. I said that if the daily candle closes with a tweezer pair combination, we're going up 30% on ADA. Mark my words, I called it for Link and I'm calling it for ADA. And that was, September the 24th, the daily, which this one right there. And we actually did close with a daily. Okay, and because we closed with the daily, guess how much we went up, guys? Total, we went up exactly 30%. Did you guys see that? From here, the bottom, to up there, to the top of that wick there that you see, 30% on the nose, okay? And this one here was about a 21% gain. So I entered mine around 73 cents, believe it or not. Sorry, not 73, 79 cents, okay? So I entered mine around 79 cents to 82-ish. So my base price was about 81. So I caught literally 20% of this wick about. Okay, so I caught a really good, I didn't play it on the daily only. I looked on lower time frames, right? So it was a beautiful candle, in my personal opinion. And I think that it was the best trade that I have ever made this year, where I played literally $200,000 and made about, 40K on it. So it was a pretty big trade to me. It's been a long time since I made like a really big 5-figure trade, like win in one big trade that was less than 24 hours. So I think that this was a phenomenal video to be taking a look at. So where do I stand right now? Okay, where I stand right now is that on the 2-day, right, we're above. The 2-day is really bullish right here, and we got to take a look at the Fibonacci retracement of it. So the Fibonacci retracement goes like this, right? We're looking for a retracement. It's probably going to get up to somewhere there, in my opinion, like 10.5-ish about. So we're very, very much so likely to be trending to a region that's high. And the cool thing about this is that this is most likely 1, that's 2, okay? And that's 1, 2, 3, 4, and 5 coming to the downside. Then we go up there to the 4, and here's the 5. And the 5 makes a beautiful doji type of candle. And this doji candle, guys, it's amazing in my opinion. And this is on the 2-day right now, okay? We got a hammer on the 2-day at the end of the 5th wave. So what's most likely going to happen now is we're going to be downtrending, okay? And we're going to probably make an ABC to the upside here, I'm guessing. We're going to make an A, probably going to take a B. I don't think that we're going to get much lower than that, though, honestly. Maybe something like that, okay? Who knows? Because I think that this support is going to hold right around here. So that's kind of the breaking point, right? On average, this little clustered region in there is very significant in my opinion. Just taking kind of the average of it as well, it's kind of like this region, that's the median. So I think we're going to be holding above like 92 cents about. Yeah, 92 cents will be holding above it. And yeah, that's kind of my thoughts for now. So I'm gonna update this quickly for you guys as well, okay? Actually, I'm not gonna do it. I'm gonna leave that for the premium group. I just want to give you guys a quick lesson video on how candlestick analysis is just amazing. So yeah. Anyways, I just want to give you guys a really good lesson video. It's very important to review your trades. So the main thing to take away from this video is that a tweezer pair combination is an epic thing. Okay? It is really, really epic. And I think that when you get this, it's not guaranteed every time, but when you get it on a major downtrend, there's a very high chance that we're going to uptrend. And we've proven it here, and that's how I was able to capitalize on this major trade. And of course, I'm using other confluent reasons, such as Elliott wave theories, 1, 2, 3, 4, 5, coming down already. I'm also using the fact that, you know, on the 2-day, we're getting to the 200 EMA. I'm also factoring in right here that we're almost at the 618 Fibonacci retracement there. We didn't quite get there, but we were getting close, right? Also factor in this specific region right there. Okay, so there's a lot of confluent reasons for us to consider, and I personally thought that it was a great place to be entering a trade, and that's exactly what ended up happening. So those are kind of my thoughts for why I entered this trade during that specific time. So this was kind of a high as well, right? These ones did really well up here. We're talking 30% gains, right? So that region is not too much, but of course we factor in all the resistances. That's the breakpoint coming down, the 200 EMA, the Elliott wave theory count of 1 to 5 already, and then you got, you got like the, yeah, sorry, the 200 EMA, the Elliott wave theory 1 to 5 as well. You got the 2-day hammer candle, right? This one started the 25th. This one here started on the 23rd and then 24th combined, which finished off that daily candle as well. And then on the daily, we ended up getting tweezer pair combination, and we're just getting so much support above the 2-day EMA of the 200. So this was a phenomenal trade to take, and it's kind of like finding out many reasons why you should be entering a trade. So anyways, I hope you guys enjoyed this video, and once again guys, I'm letting you guys know straight up that if you haven't taken my course yet, you guys need to take it. And near the end of the month, I usually give a big discount. It's normally going for like 240 American dollars, but right now I've only got 2 left already. Okay, I've only got 2 left, and I'm discounting it right now for 140 American, just because I got 2 left. And I know people, you know, it's the end of the month, everyone's tight, right? And people are like, Phil, why do you charge if you do well trading? I'm like, you know what? Why not? To be quite honest, it's another revenue stream, but it's not that much, guys, because a lot of you guys got the free courses for free as well, already, or the course for free already. And when you factor in things like how much time it took me to make, which was about a few hundred hours, lots of effort as well, how cheap it is compared to everyone else out there, and how much better it is as well, it's definitely worth 140 American dollars. So I've got 2 slots left for the people that want it for the rest of the month there, 5 more days, and I'm only selling literally 10 of these a month from now on. And if you guys want it and it's sold out, you're gonna unfortunately have to be on a wait list for the next month. So let me know if anybody wants it for 140 American, and we'll go from there. And there's 2 slots. I hope you enjoyed this tiny little video that I made to explain this basic candlestick analysis 101 to you guys. Okay, have yourselves a great night. Thank you for watching this video.